Good afternoon. This is Ryan Gunvalson at the Holtz Group. I'm sitting in and filling in for my business partner and colleague, Shelly. And we've got Michael Swenson from St. Croix Home Loans with us today and talking a little bit about the rate environment that everybody's experiencing right now. And I got a series of questions wanted to chat with Mike about and get his take on some things. So let's take it away. Does that sound good, Mike?
Yeah, thanks for having me, Ryan.
Absolutely, our pleasure. Well, so with the rates have hiked up quite a bit over the last 6 months, 7 months now. And one of the questions I'd say is like, what's one of the most important pieces of advice that you would give somebody looking to purchase a home in a rising rate environment?
So the first one I'd say is be prepared. So reach out to a mortgage professional, make sure they can review the credit, liabilities, income, and assets, and have a plan put together to make sure that you're in a position to qualify for the best mortgage pricing that you're going to be available to get. Um, I think another piece of advice is never settle for just one quote. Sometimes people assume that mortgage rates they are what they are and everybody's going to be the same, and that's far from the truth. So I typically advise people get two, maybe three quotes from different channels in the mortgage business. There's banks, there's correspondent lenders, there's brokerages, because the rates and the pricing can be dramatically different between each one. And a quarter in the interest rate or a half in the interest rate, that can mean many thousands of dollars over the life of the loan. So you don't want to leave that on the table by taking one quote and going with it and not at least comparing. One other thing I would add is sometimes loan originators they'll tell the borrowers to not let anyone else pull their credit. And they do that probably because they don't want them to be shopping around. Where in reality, there's a 45-day window when it comes to credit inquiries for a mortgage that within 45 days, any mortgage inquiry only counts as one. So make sure that you're not put off by somebody telling you don't let anyone else pull your credit because they don't want you to shop for a loan and maybe find a better offer. You are able to do that. You are free to do that. It won't impact the credit to have two or three inquiries on there. And also, when you're getting quotes, try to get them on the same day. Mortgage pricing changes every single day, sometimes numerous times a day. So if you're going to go out and want to compare apples to apples, get the quotes on the same day.
Perfect. That makes good sense. What would you say? What happens to purchasing power and affordability when rates are going up in this kind of market?
Sure. Well, when rates increase, payments increase, buying power decreases. And a lot's going to depend on the debt to income ratio, which is what your mortgage professionals will be looking at, which is a big qualifying factor when it comes to getting approved for a mortgage and how much. For example, a monthly budget of $2,500 a month in the beginning of 2022 would mean a purchase price of approximately $520,000. That same borrower today, with a rise in interest rate, would be looking at a purchase price of around $400,000 based off these higher interest rates. Also, currently rates are still considerably low from the historical average of interest rates, which is 8%. So when it comes to the interest rates and where we're at now, we were spoiled for a couple of years there with these artificially low interest rates. And now we're just back at the same level as we were in 2018.
What what are some other things, Mike, that folks need to be aware of when looking for the right house after like they've gotten their pre-approval a while ago and a lot of time has passed since they've got that pre-approval?
Sure. Make sure that the lender is periodically reviewing the initial pre approval amounts and getting updates on the monthly payments to make sure that you're still within the budget if these rates have increased and the pre approval amounts haven't changed from the initial pre approval letter you've received. I've heard countless stories of somebody who may have gotten a pre approval letter 2 months ago, 3 months ago, haven't spoken to the lender, are out there shopping and looking and maybe putting an offer on a home if it was a to be determined property address. Come to find out that the rise in rates have now made it so they don't qualify for that house anymore. So just to make sure that as a buyer you're updated with what the payments are, what the rates are, and what that pre-approval amount to purchase is.
Are there any options? Let's just say as a scenario, somebody buys a house and after they lock up the deal, they got the house. What if rates were happen to go down after the purchase? How would that affect them? And can you do anything about rates going down after you've already purchased?
Absolutely. You can always refinance your mortgage. So sometimes people don't quite realize that once you have a mortgage, especially maybe a first time home buyer, they don't understand that there's a process that if you want to refinance that loan, let's say rates have dropped by a full percent or more, if you keep an eye on these rates and see that they have dropped, reach back out to a mortgage professional, have them put together an estimate, have them see if it makes sense to complete a refinance on that mortgage and get you that lower rate and that lower payment going forward.
That's all the time that we have today. So if you've got any mortgage related questions, go ahead and give Michael Swenson at St. Croix Home Loans a call. We'll have his information below. And if you've got a real estate question, thinking about buying, selling, or really just know somebody that's making a lifestyle change, go ahead and reach out to us at the Holtz Group, and our information is below as well. Thank you.
Thanks, Ryan.